Hey, what's up, guys? Paco here, and welcome back to a new episode of Trading with Paco. Today, I explore the topic which is talked about a lot, to say the least, not only on the news or between professional, but also just in our everyday life, and that, of course, is Bitcoin. In this video, I explored what Bitcoins are, where they came from, how they work, and also why are they so valuable. But before we get into it, don't forget to leave a like, subscribe if you're new, and activate notifications as I will be releasing weekly videos. Also, feel free to comment down below with any feedback or just positive comments because they keep me motivated to keep working on weekly videos. Without further ado, let's get right into it. But what are bitcoins? Well, bitcoins are cryptocurrencies. And so virtual currency, which is completely virtual, so online. There are no physical bitcoins in existence. All of the ones that you might see online are just drawing or fake. They're not actually made physical. So it's literally like cash. You can use it to buy products or other services online and even in real life, but not many shops accept bitcoins just because of their high volatility and them notoriously not being too safe. Some countries in the world have even gone a step ahead and banned them altogether. But these bitcoins, who made them? Was it a bank? Was it a country? Well, no one actually knows who invented Bitcoin. It remains a mystery to this day. The original white paper of Bitcoin was written by a person known as Satoshi Nakamoto. And this is the person associated to the invention of Bitcoin, but it could possibly be a group of people. In years, well, that was in 2008, so 12 years ago, 11 now almost. So in that time, many people have maybe claimed that they were the actual creator of bitcoins, or others have been suggested as being the actual inventors. But conclusively, to this day, we actually don't know who originally invented Bitcoin. So how do Bitcoin transaction works? Well, every Bitcoin is basically a small computer file which is stored in your wallet online, which could be an app on a smartphone or just online on your browser. So people can send Bitcoins or even small parts of one, especially considering how expensive they are in modern days, to another digital wallet online, and you can do that to you. So you can use them as actual cash. Something important to notice is how every single transaction with Bitcoin is registered on a public list or book called the blockchain. Remember this word. So the blockchain allows anyone, literally every person in the world, to access the history of a bit of bitcoins, and this allows it to stop scams or stop people spending coins which are not their own, or even undoing transaction after they already happened. But why are they valuable? Well, it's actually a very interesting. So there are many things which are actually considered valuable outside of just simple money or cash, such as gold or maybe diamonds. Well, in history, it's always been interesting because the Aztecs, for example, used cocoa beans to pay. Or we have the word salary because in the past, salt was so precious that it was used to actually pay people. So, in conclusion, bitcoins are valuable because people are willing to pay a lot for them, and they're willing to pay a lot for them, or even they're willing to pay with services or even real cash. So, them being requested a lot is what actually makes them valuable. But how do you achieve these bitcoins? Well, you could possibly trade for them, or maybe sell a product and get bitcoins in exchange. But what many people do is go mining, and these people are called Bitcoin miners. But what does mining work? Do you actually go where coal is found and with a pickaxe? Well, not really. So miners use military grade computers to secure the network and of every Bitcoin transaction. So how do they do this? Well, miners achieve this by solving computational problems, extremely complicated problems, which allow them to chain together blocks of transaction, which is why the Bitcoin famous book is called the blockchain. So for this service, the miners are literally rewarded with new Bitcoin, which is why Bitcoins are somewhat stable. So a transaction can only be considered completed once it has been included in a block. But why is this for, you might ask? Because when a transaction has been included in the block, is officially been written in Bitcoin's blockchain. So it is official. So, for example, let's say I wanted to go out and pay my friend with bitcoins for maybe a service he did to me. Maybe he fixed my sink. So, payments need confirmations in order to be official. And before a confirmation actually happened, they can still be reversed. So, if they don't have a confirmation, I could still reverse the payment. So one confirmation by a miner somewhere in the world is enough for small Bitcoin payments, and by that I mean under $1,000. So perhaps if I owe my friend $25, one confirmation would be sufficient in order for me to pay him, and that transaction cannot be reversed anymore. So if, for example, let's say I'm trading bigger amounts of money, I would actually have to wait for free confirmation for amounts between $1,000 and $10,000. This is in order to make these transactions safer. And for even bigger transactions, so above the $10,000 mark, I would actually need to wait for 6 confirmation, which might sound like a lot, but in terms of time, that's actually rather fast. So these miners are actually the backbone of the Bitcoin network, because it's them that actually secure the network and make it difficult for scammers to actually steal Bitcoins or for the network to be attacked. So I'm sure that you guys watching are thinking, nice, I can go and actually mine Bitcoins and maybe get Bitcoins for free and make tons of profit. Well, yes, but actually no, because as I said earlier, you're going against military grade technology here. Many people in the past have realized that this could have been a potential way to make a lot of money. So they actually have full warehouses of computers that are processing these codes and actually mining for Bitcoin. And if you try with your home computer, eventually the price of the electricity that you need to run this computer 24/7 might actually be higher than the eventual profit that you might make by mining for a certain period of time. However, if you wish to try just for the sake of it, there are many online services which offer you the possibility to actually mine for Bitcoin, and setting up a Bitcoin wallet is actually very easy. So yes, you might want to try and mine this, but however, my personal suggestion is stay away from it because it's just not worth it and it's not even profitable. This is a very professional thing. So if you're looking to go professionally, be aware that you might need to invest a lot in computer technology, even more than what possible gaming computers that are used at official events are worth. And it might actually be more risky now, not only because of how volatile Bitcoin is, but also because Bitcoin drop rates, we can call them, have actually been lower in the last few years, just to keep it in relation with how much they are worth online. If not, you will have a massive inflation. So maybe in the past this could have been a lot more profitable than it is today because there are many miners, so the possibility, as I said, is lower. However, as I said, if you want to try, just go ahead, but be aware that it's very hard that you might actually make a profit. Well, this is it for today's episode. I hope you enjoyed it and possibly learn more on what these mysterious Bitcoins are and how they work. If you did enjoy it, drop a like, subscribe to the channel, and turn on the notification because I will be continuing to upload weekly videos on topics similar to this. If you have any feedback, comment down below. Comments are always appreciated, both constructive criticisms and also positive comments to motivate me to keep uploading. And yes, thanks for watching. See you next week.